In Signal episode 16, we explored the consumer and retail sector, India's self-sustaining spending engine shaped by demographics, urbanization, aspirations, and digital adoption. In Signal episode 17, let's shift our focus to information technology, the sector that built India's global identity and continues to reinvent itself in the age of cloud, automation, and artificial intelligence. So let's begin with Strategy of the Week, followed by Story of the Week, Fun Fact, Market Highlights, and end with a powerful quote of the week. Welcome back to Signal, where noisy markets meet simple, sharp, and sound insights for long-term investors. When we talk about India's information technology sector, we talk about the backbone of global business. For decades, India's IT has supported banks, insurers, retailers, healthcare systems, manufacturers, and government. And today, it stands at the center of cybersecurity, cloud migration, automation, and AI-driven transformation. What makes this sector important for long-term investors is the consistency of global technological spending. Organizations continue to modernize, whether through digital workflow, data analytics, or AI integration. And this creates a stable, recurring demand environment. India's strength lies in a deep talent base, mature delivery models, and long-standing client relationships across the world. These factors collectively create predictable earnings and resilience. Long-term data suggests 11 positive years out of 15 for the Nifty IT index. Technological cycles, whether cloud or AI-led, typically last for years, hence creating predictable and recurring revenue flows. The sector is cyclical. Budgets may tighten, margins may fluctuate, but these phases tend to normalize quite quickly because information technology is core to effective operations and business continuity. Organizations may delay upgrades, but not for long. So how should investors position their IT allocation? Diversified equity funds already include India's leading IT names, providing broad and steady exposure. However, they may not be able to fully capture sharp upcycles. Sectoral and thematic funds allow for a stronger view, but they react quickly to global sentiments, and hence sizing needs to be strategic, thoughtful, and well controlled. Direct investors should focus on companies with strong base of ongoing contracts, resilient margins, trusted client relationships, and clearly defined strategic roadmap of future key initiatives. IT is cyclical in the short term, but structural in the long term. Strategic, thoughtful, and well-controlled sizing with a guidance from a SEBI-registered investment advisor enables investors to capture the sector's full potential. For our story of the week, let's meet Devanshi, an operations head and a thoughtful long-term investor. In 2022, the IT sector softened. Global clients delayed spending, deal cycles lengthened, and the index dipped. Devanshi started worrying if the sector lost its momentum. Instead of reacting emotionally, Devanshi decided to meet her SEBI-registered investment advisor, and together they decided to revisit fundamentals. Stable global technological spending, India's strength of delivery, and multi-year demand of cloud, cybersecurity, automation, and AI meant Devanshi continued with her SIPs while keeping her IT allocation carefully controlled and capped. By 2024, the sector recovered with renewed budgets and large transformation deals. Devanshi's discipline helped her participate in the recovery cycle. Devanshi's story leaves us with this simple truth. Capability-driven sectors reward the investors who stay steady through the cycle. Do you know the message contained in India's very first email in 1986? It simply said, "This is a test. From that single line, India went on to become the world's IT powerhouse. And that brings us to the market highlights of the week ending 28th November 2025. The markets held steady this week. The Sensex closed at about 85,706 points, up by about 474 points from last week's close. The Nifty ended near 26,203 points, up by about 135 points from last week's close. Both the indices saw midweek softness but recovered by Friday. Sentiment stayed constructive, supported by domestic flows and selective large cap buying. Global cues were soft, but Indian markets remained resilient. At a sector level, IT and FMCG showed strength, autos and metals experienced mild pressure, and financials traded within a narrow range. FIIs remained cautious, while domestic institutional investors provided consistent support. The rupee hovered near 89.37 per US dollar, reflecting global dollar strength. Overall, a stable week marked by resilience in frontline sectors and healthy participation in quality names. Now let's move forward to quote of the week by Narayana Murthy. Growth is painful. Change is painful. But nothing is as painful as staying stuck where you do not belong. In other words, growth and change both can be uncomfortable, but remaining still is far more costly. In the IT sector and long-term investing, the real progress comes from adapting, evolving, and moving forward. Markets may challenge you, cycles may make you feel uncomfortable, but the real pain lies in staying still. Investors who embrace thoughtful change ultimately participate in full curve of growth, reinvention, and compounding. We are building a strong community of intelligent, insightful, and inquisitive long-term investors. If you're one of them, why not like and subscribe us and tell us in comments which IT company you think will remain relevant in the next decade and why.